All right, let's talk about something you probably have, but maybe don't fully understand. That group disability insurance in your benefits package. What does it actually do? It's a super important financial safety net, but man, it can be confusing. So today, we're going to break it all down, simple and clear.
So here's what we're going to cover. We'll start with the basics. What even is a group plan? Then we'll see how it's different from an individual one. We'll walk through what happens if you actually need to use it, talk about short-term versus long-term, and wrap it all up with how it plays nicely with all your other benefits. Sound good? Let's dive in.
Okay, first things first. Let's build this from the ground up. What exactly is a group disability plan when you get right down to it?
So you hear group and you think a bunch of people, right? Simple. Well, not so fast. When it comes to insurance, that word group is actually pretty specific. It's not just any random collection of folks. So what are the actual rules here?
It really comes down to four main pillars. First, the group has to be natural. Think employees at a company, not just a bunch of friends who decided to get insurance together. Second, and this is huge, the price, your premium, is based on the risk of the entire group, not just you. That's a game changer. Third, your boss can offer different plans for, say, management versus other staff. And finally, you need a certain number of people to sign up. And that's super important, right? Because otherwise, only the people who think they're going to need it would join, and the whole system would get way too expensive.
Okay, so that's a group plan. But how does it really stack up against just going out and buying a policy for yourself? This is where a lot of the confusion comes in. So let's clear it up and look at the key differences side by side.
This chart makes it super clear, doesn't it? With a group plan, yeah, you might have to wait a bit after you start a new job before you're eligible. But check out the benefit amount. It's a percentage of your wages. That's awesome because when you get a raise, your coverage goes up automatically. You don't have to do a thing. With an individual plan, it's just a flat dollar amount. To get more coverage, you have to go back and actively add a special option. The group plan just scales with you.
All right, so we get the theory, but what happens in the real world? What if you actually get sick or hurt and you need to use this thing? Let's walk through exactly how that safety net is supposed to work.
So, the very first term you've got to know is the elimination period. Think of it like a countdown clock. It's the waiting period after you get sick or injured, but before the insurance money starts flowing. It's really important to remember, it's not immediate.
And a really good benefits package makes this whole process feel pretty seamless. Let's paint a picture. Say you get injured. For the first 5 or 10 days, you just use your regular paid sick leave. See, that neatly covers the elimination period for your short-term disability. Then, bam, the short-term plan kicks in. Now, if you're still unable to work after, let's say, 180 days, that's when the long-term plan is designed to take over, right when the short-term one runs out. It's like a relay race.
Okay, so we just threw around short-term and long-term disability. They might sound like two sides of the same coin, but they're really two different animals. They're built for different situations and have their own set of rules.
Let's break it down. Short-term disability is for, well, shorter problems. Think a few months, like 13 or 26 weeks. It's meant to get you through a crisis, and it often replaces a higher chunk of your income, maybe even all of it. And the definition is pretty straightforward. You can't do your own specific job. Now, long-term disability is for the really serious stuff. The benefits can last for years, sometimes all the way to retirement. The income replacement is a bit lower, maybe 50 to 70%. But here's the kicker. Pay attention to the definition. For the first year or two, it's about not being able to do your own occupation. But after that, it often switches to your ability to do any occupation. That is a massive, massive difference.
Just to make that concrete, a super common max benefit period for a short-term plan is 26 weeks. That's half a year. So you can see it's really there to bridge a gap, not be a forever solution.
And what about that long-term plan? Well, your benefit is usually capped. 70% is a really typical ceiling. The idea is to give you a strong financial floor to stand on, but it's not usually a full dollar-for-dollar replacement of your old paycheck.
Okay, last big piece of the puzzle. We need to talk about the big picture, because your group disability plan doesn't just exist on its own little island. It's actually part of a whole ecosystem of benefits.
These things are designed to be pretty smart. They don't operate in a vacuum. The whole point is that they work with other benefit programs. This makes sure you're covered, but it also prevents weird overlaps where you might accidentally end up making more money while disabled than you did when you were working.
So here's how that coordination actually looks in practice. Let's say you get hurt on the job. In that case, workers' comp is going to be the main pair. Your group plan might kick in a little extra on top. These plans also link up with government programs like Social Security disability. And that right there is the key reason why most of these group plans are specifically for non-occupational disabilities. Why? Because the occupational stuff, the injuries at work, are already supposed to be handled by workers' comp.
And here's a great little rule of thumb, a pro tip from the source material. If you're ever looking at a plan and you're not sure, just assume it's non-occupational. That's the default, that's the most common setup. It's there to cover you when stuff happens outside of work.
So now that we've gone through all of this, here's the real question for you. Can you pull up your own benefits package and tell me how it works? Do you know what your elimination period is? Do you know what percentage of your income is covered? Do you know how that handoff from short-term to long-term is supposed to happen? Seriously, taking a few minutes to find out is one of the smartest things you can do for your financial security.